Good afternoon, everyone. Welcome, welcome, welcome to a very special webinar that we have today on export financing for your small business members. This is a joint webinar with NCUA and Exim Bank. I hope you're doing well. My name is Catherine Baxter. I'm going to be your moderator for today's event. And we do have two special speakers that I'm going to introduce shortly. But before we do that, you know the drill. Here's the administrative announcements. Please adjust the volume on your computer so that you can hear this webinar clearly. If you need to resize these slides, drag the bottom right corner. From this site, you will need to allow pop-ups. Throughout the webinar, what we'd like you to do is to use that Ask a Question feature on the left-hand side of your console. And please ask your question directly to the person that is speaking. So please say their name while you're asking the question. And then, as always, in approximately 3 weeks, this webinar is going to be closed captioned for on-demand viewing in NCUA's learning management system. So as I mentioned, we have two very special guests. We have the chairman of NCUA, the Honorable Rodney E. Hood, and also the chairwoman of Exim Bank and president, Kimberly Reed. But first, let's hear from Mr. Hood. Mr. Hood, please.
Great. Thank you so much for that introduction, and thank you all for joining us today, and welcome to everyone. Ladies and gentlemen, we all are well aware that our nation is facing an almost unprecedented set of challenges due to the COVID-19 pandemic and the attendant economic slowdown. I've spoken to many of our industry leaders over the last 6 months who have shared with me, in frank and forthright terms, their concern over the depth of these challenges. They see the effects on their member owners and their local communities. They see the uncertainty, and it's understandable that everyone feels a little anxious about the future. Honestly, I share many of those concerns and anxieties myself, which is why I'm always so pleased and impressed when, after talking about their concerns and anxieties, these same industry leaders immediately shift gears and start telling me about what their institutions are doing to confront these challenges head on. I've heard countless stories about how credit unions have responded to help out a member owner who's struggling with a health crisis or facing a job loss, or whose small business needs an adjustment in loan terms to see them through this difficult time. When I think about these stories, I'm proud of the credit union industry for its strength, resilience, and commitment to community. Those ideals are very much in the industry's honorable tradition of people helping people. At the NCUA, one of our top priorities during this time of trial has been to give credit unions the tools they need, first, to weather the current storm, and second, to lay the groundwork for the economic recovery that will follow. And we all understand that a recovery will come at some point. We may already be seeing some green shoots as consumers and businesses begin now to adapt to a new reality. But in the meantime, please know that there are things that we can all do to help. And the first of those is to point lenders and borrowers toward the support resources that are already in place. I've called these the low-hanging fruit: government funding sources, grants, loan programs, and loan guarantees that are already funded and there for the taking. But we need to steer people towards them. There are plenty of entrepreneurs and small businesses that might be eligible for these programs, but they either aren't aware of what's available or they're unsure of how to get started. The NCUA is working to bridge that knowledge gap, and today is just one such example. We looked at the network of institutions we oversee, the nearly 5,200 federally insured credit unions with more than 121 million member owners, and saw an opportunity for credit unions to serve as an information gateway to connect small business owners with these aforementioned kinds of programs. Just this past June, the NCUA signed an agreement with the Export-Import Bank to develop educational and training initiatives on export financing opportunities to share with credit unions. Our goal was to give you the tools you need to educate your small business members about the available opportunities, such as an Exim guaranteed loan being exempt from the member business cap of 12.25%. We signed a similar agreement with the Small Business Administration last year, which has also been highly successful. Of course, not all credit unions work with small businesses that handle export trade, but for those that are working in that area, knowing where to turn for help with financing and being able to share that information with small business borrowers so they can seize these opportunities will indeed yield significant benefits. Helping small businesses to gain access to capital is essential, and we expect this collaboration to be a great help to many hard-pressed entrepreneurs, particularly those with steep challenges that they are facing in today's uncertain environment. In today's webinar, we'll talk in more concrete terms about these resources and how credit unions can help their small business member owners to access them so that they can regain their footing, create sustainable jobs, and spur the economic recovery to come. So again, ladies and gentlemen, I'd like to thank all of you for joining us today to learn more about these Exim opportunities. And with that, I would like to turn over the podium, imaginary podium for this matter, since we all are calling in virtually. But I'd like to now present you with Chairman Kimberly Reed from the Export-Import Bank. Good afternoon, Kimberly.
Thank you, Mr. Hood. We're going to go right to Ms. Reed.
Thank you very much, Catherine Baxter. This is Kimberly Reed, President and Chairman of the Board of Directors of the Export-Import Bank of the United States, or as we say, Exim, E-X-I-M. I first of all want to salute my great friend, Chairman Rodney Hood, for all of the hard work he and the staff of the National Credit Union Administration have been doing, especially the effort that has gone into making the new partnership between credit unions and Exim a reality. The NCUA, which Chairman Hood leads, is the independent federal agency that regulates, charters, and supervises federal credit unions. Without his help, Exim could not be working with credit unions in the way we are today. In June, Chairman Hood and I signed a memorandum of understanding that launched a 3-year collaborative effort between Exim and NCUA. It will bring small businesses and credit unions together and promote Exim's export financing products among federally insured credit unions and their members. In doing so, it will facilitate the development of services by credit unions, the expansion of export financing opportunities, and the creation of employment opportunities for U.S. businesses, particularly in the small business sector. Chairman Hood has called financial inclusion the civil rights issue of our generation. Since President Trump appointed Chairman Hood to lead NCUA, he has focused with great effectiveness on getting credit into the hands of the underserved and the marginalized, and bringing new opportunities to urban neighborhoods and rural communities that are fighting decline. The credit union industry has a hard-won reputation for high-quality service, low cost, and integrity in providing financial services. One of the important benefits of credit unions, especially today as we all work to reopen our economy in the aftermath of COVID-19, is their great ability to support small businesses. Credit unions can support them even more by providing small business exporters with working capital loans guaranteed through the Export-Import Bank of the United States. Exim's guaranteed working capital loans offer great opportunities, including their being exempt from the credit union member business cap of 12.25%. These loans allow credit unions to support small business members that are exporting while minimizing risk. Credit unions grew during the adversity of the Great Depression, but still today, federally insured credit unions are as important part of the United States financial structure as ever, with more than 5,000 institutions and a total membership reaching 120.4 million during the fourth quarter of 2019. Credit unions' total assets are $1.57 trillion, and their total outstanding loans are $64 billion. Exim, too, performs important functions. Exim fills gaps in private export finance in order to bolster U.S. job growth. We provide trade financing solutions such as export credit insurance, working capital guarantees, and guarantees of commercial loans to foreign buyers to empower exporters of U.S. goods and services. Since May 2019, when the quorum of the Exim Board of Directors was restored, Exim has approved over 2,000 small business authorizations totaling more than $2.4 billion. Credit union members need financing to grow their international sales, showcase the high quality of great made in the USA goods and services, monetize their valuable intellectual properties, and provide stability for their employees, all while mitigating the risk of non-payment on international sales. Exim can assist U.S. exporters by protecting against buyer non-payment, providing the ability to sell to foreign customers on credit terms, enabling the ability to borrow against export-related assets, financing a foreign buyer's purchase, limiting country and credit risks, and satisfying bank regulatory requirements. You're going to hear about this and a great deal more from Business Development Specialist Exim and from Smaro Karakastanos, Director of Business Credit for Exim. Thank you again for taking time to learn about the opportunities Exim offers credit unions and their members. Have a great day, and thank you for listening.
Thank you, Chairman Reed, so much, and thank you, Chairman Hood, both of you, for your wonderful comments. And now we're going to turn our webinar over to our host, which is Udwak Essien. She's the Director of Credit Markets with NCUA in the Office of Examination and Insurance. Udwak, you have it.
Thank you, Catherine, Chairman Hood, and Chairwoman Reed, and thank you for joining us today. May I extend my well wishes to you and your families as we work through this pandemic. My name is Udwak Essien, and I am the Director of Credit Markets in the Office of Examination and Insurance. Many of you have already experienced growth in commercial lending and or are looking to expand your commercial lending footprint. System-wide, commercial lending in credit unions has increased more than twofold over the last 10 years, and commercial lending as of March 2020 stood at $85 billion. So most of it is related to real estate, which is bricks and mortar. As the world has become an ever more complex and connected place, expanding markets to the international marketplace has become ever more important, even for small businesses. And Exim will provide some examples of very small businesses who became successful exporters, even with very small operations such as making and exporting homemade pies and pickles. It is my pleasure to welcome the Exim team, Smaro Karakastanos, Director of Business Credit, and Jeff Clare, Business Development Specialist, both in Exim's Office of Small Business. Smaro and Jeff will explain the details of two of Exim's products that may be applicable to your credit union and members. These two products are Exim's Guaranteed Working Capital Facility and Export Credit Insurance. As both chair people alluded to in their remarks, because of the Exim guarantee, the guaranteed portion of the loan is not subject to the 12.25 member business cap. During the presentation, we will check in with you using some poll questions. And after the presentation, we will have an opportunity to address your questions and answers during a Q&A period. Before we move on to learn more, I'm obligated to handle some administrative items. First, the disclaimer. The materials presented in this webinar are intended as an informational and educational summary of general export financing for small businesses. The NCUA has taken reasonable measures to ensure the quality of the data and other information produced by the NCUA that is available in this presentation. The NCUA, however, makes no warranty, express or implied, nor assumes any legal liability or responsibility for the accuracy, correctness, or completeness of any information that is available through this presentation, nor represents that its use would not infringe on privately owned rights. The slides are intended for educational and discussion purposes and do not constitute legal advice nor replace independent professional judgment. Reference to any specific commercial product, process, or service by trade name, trademark, manufacturer, or otherwise does not constitute an endorsement, recommendation, or favoring by the U.S. government or the NCUA. Now for our first poll question. To give us a better sense of our audience today, which asset range represents your credit union? Please use the radio button to log your response. 0 to 50 million, 51 million to 250 million, 251 million to 1 billion, over a billion, or not a credit union. I'll give you a few seconds to respond. And again, this just gives us a sense of who's on the line today. And we'll be taking a few more poll questions as we go through the presentation to keep you engaged. Okay? Hopefully you've had enough time to log your response. So let's see where we landed. Okay, it looks like not a credit union is the biggest category. That's good to know. But otherwise, it looks like we're equally split between 0 and 50 million and 51 million to 250 million. So credit unions generally on the smaller side. Very good to know. So without further ado, I will hand over the presentation to the Exim team.
Good afternoon. Thank you, Uruak. My name is Samara Karakatsianis, and I am the director in the business credit group at Exim Bank. So just to start out with the basics of Exim Bank, our mission is to support American jobs by facilitating the export of U.S. goods and services. We are a government agency headquartered in Washington, D.C. We were established in 1934, and we do have 12 regional export centers around the country. So my group manages the Working Capital Loan Guarantee Program. The benefits of this program to our lenders is to be able to expand services to existing members, their existing customers, attract new customers, and increase the revenues. It also improves our loan credit risk ratings. It's important to note that we do not provide a loan. We provide a loan guarantee to the lender that backs the exporter's debt. So again, we allow the members to, it helps them increase their sales and profitability, and it also helps expand their collateral base. So the collateral base that we allow is the export-related inventory, including raw materials and work in progress, and also export-related accounts receivables. And we also allow under the guarantee standby letters of credit, bid, and performance bonds. So what is an asset-based credit line? If you're not familiar with this, it's a structure in which the exporter can borrow using their outstanding receivables and inventory as collateral to bridge the cash flow gaps in their working capital cycle. So this type of lending is ideal for companies who are growing quickly or have a lot of cash tied up in their inventory and receivables.
Now for our next poll question. Does your credit union currently offer asset-based lending to its business members? And the answers to select from are yes, no, I don't know, or not a credit union, please use your radio buttons to select one of the answers. And again, I'll give you a few seconds to log your answer. Tomorrow just covered asset-based lending in the previous slide. It's a credit line where you can borrow against receivables and inventory including raw materials and finished goods, and it allows you to bridge cash flow while the borrower waits to convert inventory to cash. So hopefully you have logged your responses, and we will see where we land up. Okay, again, we have a sizable population here that's not a credit union. And then of the rest of the group, the biggest category, almost 50%, looks like they do not currently offer asset-based lending and may need to build a learning curve to successfully take advantage of Exim's working capital facilities. So thank you for your responses.
Smorrow.
Hello, sorry about that. So, to start again, so who qualifies for an Exim Bank loan guarantee? So Exim imposes very minimal qualifications on exporters looking to get some financing. However, the lender does need to get comfortable with the transaction, and then they have their own credit requirements that the exporter needs to adhere to. So basically, the exporter needs to have operations within the United States. The goods must have at least 50% U.S. content and must be shipped from the United States. They must be able to generate export-related receivables and potentially have exportable inventory, and must be able to demonstrate reasonable assurance of repayment. In addition, we'd like to see that they're at least 1 year in business, and they're adequately capitalized, and they can also have be able to they can have the capability to report. We do have some reporting requirements such as financial statements and borrowing basis, so we need to make sure that the exporter has the ability to report. And we also support, an array of businesses such as manufacturers, wholesalers, distributors, and service companies. And we assist, anyone from oil and gas suppliers to food manufacturers to distributors of household goods to airplane parts manufacturers. So we have an array of businesses in our portfolio.
Now for our next poll question. Does your credit union have a dedicated department, team, or a person, an individual, that handles business account member lending? Yes, no, I don't know, not a credit union. Again, please use your radio buttons and select one of the answers, and I'll give you a few seconds to log your answers. As most of you know, commercial lending is very different from consumer lending in that the credit assessment and risk management is a lot more complex. In the NCUA's MDL and commercial regulation, it sets out policy and program responsibilities that credit unions must implement as part of a safe and sound commercial lending program. Now let's see what our responses are. It looks like we are in the majority for credit unions, for those who have a dedicated department, team, or person who handles business lending. Possibly we may have some credit unions who currently do not engage in commercial lending, but it looks like the rest of you are making sure that you have a select person or department that's engaging in commercial lending and has staff who is trained to handle it. Thank you for your responses.
Thank you. So continuing on, lines of credit. So what types of lines of credit do we support? So we have transaction-specific lines of credit, which is basically your exporter needs to fulfill this one contract overseas, so you're able to use our guarantee to support the financing of that one contract. We also offer transaction-specific revolving facilities, which means your exporter may have a few contracts out there, or their contracts have milestone payments through the term of a contract, so continuing to build and ship under a particular contract. And our most popular is the revolving line of credit, which means multiple transactions, export orders in the hundreds of thousands per month, and it allows the line to revolve. So proceeds are remitted back to the exporter, and the exporter reuses those funds to fulfill the upcoming orders. So our average line of credit is usually about $4.5 million. However, we have no minimum or maximum amounts. We have loans where guarantee supports loans that are in the $100,000 or $200,000 range, and we have some in our portfolio that reach the $50 million, $100 million, $200 million mark. So there is no minimum and maximum under our program. So the eligible collateral. So under our program, you can borrow to 90%, your exporter can borrow to 90% of export-related receivables. Now, without an Exim Bank guarantee, the lender may possibly exclude those receivables from their borrowing base due to foreign transaction risk. So this is a great benefit. We also allow these receivables to stay eligible in the borrowing base, which is the collateral base that is used to make disbursements off of. And we allow them to stay in the borrowing base for up to 60 days past due. We also can extend that up to 90 days if there's export credit insurance on those receivables. And then the sales on these terms cannot exceed more than 180 days. For retainage receivables, we allow a lower advance rate at 25%. Again, this is much more beneficial than a lender looking at this who may not lend on retainage receivables at all. And receivables must be in U.S. dollars. However, we do accept from time to time receivables are in a foreign currency. That just entails a waiver from us to allow those foreign currencies to be foreign currency-backed invoices under the borrowing base. If they remain unhedged, the advance rate will decrease down to 70%. So ineligible collateral, again, related to export-related receivables. So we unfortunately do not support intercompany receivables. So if you have a U.S. exporter who is selling to their sister company or to their parents, we unfortunately cannot support those, as we would be literally supporting their operations. Receivables from military organizations, we do not support sales to military organizations. We do have a military policy, which is very explicit, and there's a couple of very small exceptions that we would allow, but otherwise we do not allow receivables from military organizations. Receivables from prohibited countries. So these prohibited countries, they're located, we have a list on our website called the Country Limitation Schedule, which outlines what our restrictions are in each country. We do have a small handful of countries who we cannot support export sales to. And letters of credit prior to shipment. Having an LLC prior to shipment, it would not have generated the receivables needed for that sale. So we would advance against the receivables after the LLC has been issued, after the items have been shipped. Moving on to eligible export-related inventory. Again, like I briefly mentioned earlier, we do support raw materials, work in progress, and finished goods. And we allow a 75% advance rate in inventory in all those stages. The inventory must be located in the United States and must be valued at lower of actual cost or market value. Now, because of the pandemic, we have issued some COVID-19 relief measures. So we have allowed additional inventory to be included in the borrowing base, which would allow for any potentially exportable inventory, which means anything that an exporter may have in their warehouse that could be exported, such as stock inventory, packaging that's used to package their exports, items like that that could potentially be exported, we do now allow them in the borrowing base. So this next slide is probably my favorite slide. This is the slide you want to use when you are either educating your colleagues, your loan officers, your line teams, and it's a great slide to take with you to potentially, to meet those potential clients. So this shows you how our guarantee will help the borrowing base of your client. So you see in the first category, it says your working capital facility without Exim Bank. And you see there the categories of inventory, raw materials, WIP, and finished goods, and the low advance rate that a lender would advance on to come to the borrowing base figure. And again, moving further down, you see the receivables line items and how open account would typically receive a 0% advance rate. And an LC-backed receivable would have maybe maximum 70% advance rate that a lender would provide. So that'll give the borrower a $760,000 borrowing base to advance off of. Moving on to the next column, this is what your borrowing base would look like with an Exim Bank guarantee. As you can see, all categories of inventory are eligible for up to 75% advance rate, along with the categories of receivables. And at the bottom line, at the bottom figure at $1.6 million, you see that the borrowing base had more than doubled, allowing your exporter to have more borrowing base, more funding, increased ability to finance their exports. So we also do support service companies. Now, traditionally, they don't have, the traditional inventory, but we do allow disbursements against contract-related costs. So we're looking at, engineering firms, architectural firms, telecommunications. We do have some of those in our portfolio. The contract and the proceeds will be assigned to the lender, and they must be able to demonstrate their ability to perform under a contract. So the terms of sale, again, it's an array of terms that we accept. It's cash payment prior to shipping, irrevocable LCs, receivables insured with export credit insurance, either with Exim or their, insurance company of their choice. It doesn't matter to us. We can also accept uninsured open account terms and also documentary collections. So the use of financing, we support the labor, materials, and overhead, letters of credit, bid and performance bonds, warranties and retainages, and we also allow our lines to pay off existing lines of credit that your exporter may have with another lender.
Okay, now for our next poll question. But before we begin, I want to encourage you all to please send in your questions if you have any for the Exim team. And I do realize that if you're not in the export finance market, that this is a lot of information to digest. And at the end of the presentation, we will have the contact information available for Exim reps so that you can learn a lot more about their products. So our next poll question is, what is the most common industry for your business members? Manufacturing, retail or wholesale trade, distribution, services, or other? Again, please use your radio button, and I will give you a few seconds to log your answer. I realize that these are very broad and general categories, Services can include any type of service, professional, technical, consultant. Generally, something that's not considered a good. And we know that most commercial lending activities for credit unions is real estate. However, it'd be helpful to see the makeup of the non-real estate related business activity amongst your business members. So hope you've had a chance to log your response. And it looks like services, and that would have been my guess as well. Services is the most popular amongst you who are participating here in terms of your business member activity, followed by retail, wholesale trade, manufacturing, and last, distribution. So thank you for your responses.
Samara, you're back.
Okay, thank you so much. Continuing on, letters of credit, bid, and performance bonds. The exporter can use the line to post letters of credit and warranty LCs. If the exporter requires a down payment and their buyer requires assurance that the product will be delivered on time and per specification, they can post a letter of credit in their favor with only 25% collateral. So this is different from what the lender requires without our guarantee, which is usually 100% collateralization. This collateral can be collateralized with receivables and inventory. The term of the LC cannot exceed the term of the loan facility. Obviously, this loan facility, you don't want that to expire while having the LC hanging out there. So we want to see both the LC term and the facility term to match. We also allow warranty letters of credit. With a requirement for warranty LCs, the lender may have needs to extend another line of credit, like a domestic credit facility. We do need it 100% collateralized and with 25% in cash. And we are restricted in the amount that we can support in this category. So it's up to 20% of the loan amount or up to $1.5 million. And again, the term cannot exceed the loan term. So we do have some restrictions in the use of our funds. So no disbursements without export orders unless there's pre-approval. This has been listed temporarily due to our COVID-19 flexibilities. So if the exporter needs some flexibility as far as disbursements and whether or not they have the exporters on hand, the export orders on hand, we do allow some flexibility on a case-by-case basis. Inventory, we have a maximum cap on the inventory under the Exim facility. They cannot exceed 75% of the outstanding loan on revolving lines. Again, this has also been relaxed due to the COVID-19 flexibilities. Some of our borrowers needed to hold more inventory under the Exim facility, so we have increased that on a case-by-case basis. We do not allow our line to be used to purchase fixed assets. Our line is to support our trading assets, so purchasing fixed assets is not allowable. Again, touching on military exports, we don't allow financing of military exports. Off-cover countries, again, that goes back to our country limitation schedule, in which the lenders and the exporters may need to look at on a regular basis to make sure that the line does not support countries with restrictions. And also acquisitions. Again, this the working capital line is used to finance the trading assets and not to be used towards any sort of mergers or acquisitions. So delegated authority activity. So over 90% of the transactions in our portfolio are done by delegated authority lenders. These lenders are pre-approved by Exim Bank, and they are given a credit line from $1 million up to $10 million. This allows the lender to go out to source the deal, do the due diligence, and close on the deal, again, with their own resources, with their own time frame, and they do not need to have Exim Bank approval to do this. All they need to do is turn around and provide the documentation that we require, along with the appropriate fee, and then the facility that they closed on will have our Exim Bank guarantee on it. We do have a list of delegated authority lenders on our website. We have about a group of, I want to say, about 85 to 90 lenders, of which about 40 of them are active in our portfolio. We do not require that the transaction needs to be done or needs to have a guarantee. It's not a requirement that the lender needs to be or needs to have delegated authority. We also accept transactions from lenders who do not have delegated authority, and all that entails is for us at Exim Bank to underwrite the transaction. However, if you're not a DA lender, you can still come to us. We'll underwrite it, and then we can also offer you delegated authority if you so choose to want it. But the point is that if you do not have delegated authority, that does not mean you cannot use our Exim Guarantee program. You can, by all means, come to us, and we will help you with a step-by-step process on how we can help you book the facility at the end of the day. All right, now we'll move it on to Jeff Clare.
Thank you, Smaro. Can everyone hear me?
Yes.
I'm going to assume you all can. I'd like to speak a little bit about export credit insurance. So I'd like everyone, imagine that you own a company and it's interested in selling to an international buyer. What you want to do is you want to minimize your risk. So obtaining payment before you ship the product makes a whole lot of sense. Getting cash in advance provides the least amount of risk to your business, but it's very risky for the buyer. What the foreign buyer wants is going to be a little bit different than what you want. The foreign buyer, they're not willing to take that risk, or they may not be willing to take that risk. You might lose that piece of business to one of your competitors. The foreign buyer, they want open account credit terms. This provides them with the least amount of risk because they're going to receive the product before they actually make the payment. So how does your US-based company manage the risk of open account credit terms to an international buyer? I bet you can all guess what I'm going to say. A great way to do that is with export credit insurance. So export credit insurance is an insurance policy that covers export-based receivables for non-payment. Sounds pretty simple. When you have export credit insurance, now your company can compete more effectively in the foreign market by offering those open account credit terms that were really risky. This insurance is going to mitigate that risk of foreign buyer non-payment. And then all the lenders that are out there, they're more likely to include those insured foreign receivables in your company's borrowing base. Those are all great things to have happen when you have export credit insurance. Well, let's look at the risks that are covered by export credit insurance. When we're looking at the risks, there are two types of risks we think about. That's commercial risks and political risks. When we're thinking about commercial risks, we're thinking about a foreign buyer going bankrupt and they don't pay. Or a foreign buyer is telling you, hey, the check's in the mail. They continue to tell you they're going to pay, and they don't, and they go into protracted default. Those risks are covered. When we think about political risk, think about a war breaking out or a government just canceling an import or export license. Those things can happen and do happen, and when they happen, when you have export credit insurance, you can be covered for those potential losses. I'd like to take a look at some of the policies that Exim has available. Express insurance is a policy for U.S. companies that are new to exporting. So you're brand new, you want to do some exporting. Well, I need some coverage. What's great about Express Insurance is there's no deductible. That's a great thing. It covers 95% of the invoiced amount. The premium that you pay is paid at the time of each shipment. So you pay when you ship, you pay as you go. You don't pay a whole bunch of money up front and then work through the year like a retainer. And what's even better, Exim obtains buyer credit information for you, so you don't have to worry about that when you're just starting out exporting. When we look at a multi-buyer policy, again, there's no deductible. And the coverage and payment process are the same as Express Insurance. Single buyer policy is a little bit different. This gives U.S. exporters the ability to cover one foreign buyer or even just one foreign sale. This gives the U.S. company a lot of flexibility. So you can choose what looks like a risky sale from a buyer that may not normally be risky to you. You can cover just that sale. You may have a book of business where buyers you've worked with a lot and you don't feel that's very risky. So you just want to cover this one new buyer because you don't have a track record. This gives you a lot of flexibility to go ahead and do that. And each company, your business can have multiple single buyer policies. So you can pick and choose which policies you need and fit it directly to your needs. I'd like to look at an example of an Express Insurance policy. This example assumes that your international buyer is in the private sector and they've been given 60 days to pay. Now, in this case, a $30,000 sale would have a premium of only $195. So what that $195 is going to do is protect $28,500 in revenue, or 95% of that $30,000 sale. So we're not talking about paying for the cost of what you're selling. We're talking about the actual sale price. So you're covering all of that revenue and you're protecting it for only $195. That's money well spent. What I'd like to do is open up our forum now to answer some of your questions and thank everyone for joining us today.
So thank you, Jeff. And we are going to entertain, we have a few questions that have come in. I'm going to let everyone see the contact information here for Exim Bank, for Smara and Jeff. And of course, this deck may be downloaded on your console. You should see it in your resources tab. Also on your console, you'll see a survey. Please take that survey. It's very brief. We just want to know what you thought of this webinar and what future webinars we can offer for you. Also, we have the contact information for the Office of Examination and Insurance. So you have UDWAC's contact and Lou, so that you can contact them. And also the contact information for the Cure office. So now, without further ado, I'm going to actually put the Exim contact information back up for a minute here. Let's go to our Q&A. We have a couple of questions, and we'll take as many as we can. So the first question, Smara, are you still there with us? I'm going to give you the first question. Okay, wonderful. All righty. So here's the first question, Smara. It says, how can my organization become a delegated authority lender?
Okay, that's a very good question, a very common question, actually, as we also expand our outreach the past few months. So any organization or any lender, non-bank lender, credit union can just contact myself or one of my colleagues. What we have is a checklist of what you will need to provide us, and we go through this very this short kind of like underwriting of you as the lender, and we will provide you with delegated authority. We usually start off lenders on the $1 million mark. And then as the lender books more deals, then they basically kind of go up the ladder. There's a $2 million mark, $3.5 million mark, all the way up to $10 million. But it's very easy. You just contact us, and you will provide you with the information you need to provide us so we can do our analysis and review. And then we get you set up with the paperwork with a master guarantee agreement. And then there is some training involved. It's one class that we actually just recently provided virtually through another webinar. So we require the lender to go through that as well, to choose 1, 2, 3, however many people in the organization to take. And then they're basically off to try to book some deals under a guarantee.
Very good. So while I have you, Smarl, here's another question for you. Says, does Exim charge interest?
So under the Working Capital Guarantee Program, we do not charge interest. We do charge a flat fee. It's an annual fee, and it's based on the amount of the facility. And that's the only fee. Well, there's also a $100 application fee, but as far as we're concerned, those are the only two fees. You have the application fee, and then you have a yearly facility fee. But that's it from the Exim side, and it is up to the lender to charge whatever other fees that they are interested they need to charge. But that's up to the lender to dictate that on their end.
Okay, great. So let's hop over to Jeff. Jeff, here's a question for you. Are you there?
Yes, and I'm ready.
Oh, good. Very good. Here's a question. So does the Export-Import Bank lend directly to businesses is the question.
Well, and Smarl can correct me if I make a little bit of a mistake here, but no, we provide a guarantee. So we work with lenders, and we guarantee things like a working capital loan.
Did you want to add anything to that, Smarl, or?
No, he is correct.
Okay, awesome. So now, Jeff, we wanted to see if you can give some examples of small businesses who export with the help of Exim.
Sure. I think one of the things to really understand is when we're talking about small businesses, there's no business is too small. So there are some small mom and pop shops that we've worked with in health supplements, vitamins, pet supplies, artisanal waters. So all types of different groups. But I don't even want to just leave it right there. I mean, we've got people that are doing the vast majority of their sales are online. So they are making these sales online. Now, these are bigger sales when they're working with us, so they may be doing that on a bigger basis. And when I mean bigger, I mean $10,000 worth of product or so. So not gigantic. So it's still relatively small. But we also work with service companies. So we have companies that are providing engineering services. So that may be something from a company doing housing developments, building roads, building irrigation systems. That's also programmers, so people that are actually developing websites. So everyone in the world is looking for a website and looking for some help doing that. So we've got people that really run the gamut. Some of these, again, when you're exporting your good or your service, since you're paying as you go and really no deal is too small, it really fits into virtually every exporter or somebody that wants to export. It really makes that leap to exporting that much easier for everyone.
Awesome. Fantastic. So now let's go over to Udwak. She seems like she was getting a little lonely. So let's ask her a question. You ready, Udwak?
Sure, go ahead.
All righty. Here's your question. Whoops. I lost my question. Where'd it go? Hold it. It might have gone to, I think you moved it to Smarrows. Here's a question. So this is a good question, too, from a credit union. They said, and Smarrow, you may have to chime in on this one. If the credit union says if they're already been approved for an SBA lending status, does that expedite their delegated authority status? Good question.
Yeah, I'll let Smarrow answer that one.
Okay. So it does not expedite getting delegated authority, but I do want to preface that by saying it does not take a long time to get delegated authority. But it also does help that if you have an SBA lending status, it just helps us with our review and analysis. And it's good to know that you as a lender are already participating under the SBA program and lending with their guarantee. So it helps in the overall underwriting, the review. It doesn't necessarily expedite the process for us, but it does assist in the lender getting approval. But in honesty, it does not. I don't believe it takes long to get delegated authority status. So there should not be a long wait for that.
Okay, great. Now I have a question for you, Udwak. You ready? And we're running out of time, so I'm going to try to get these last two questions into you. So the question is, what qualifications are required for credit union staff in order to work with Exim products?
Well, first of all, thank you for the question. I'll refer you to Part 723 of N2A's regulations. There we actually do talk about qualified lending personnel with regard to, establishing a commercial loan program. So qualified staff should be, someone who can cover various aspects of the loan process. So that starts with underwriting, it goes through evaluating of performance, and then conducting loss mitigation activities. So for the first two things that I mentioned, underwriting and performance evaluation, this experience can be met by conducting an internal training and development on Exim's program. So you can deal directly with Exim on that to get that training and development. You can hire individuals who actually have that experience with Exim products or with export finance. Or lastly, you could use the services of a third party. Now, if you read in the reg, if you use the services of a third party, there are some additional requirements regarding that. So you want to make sure you're familiar with that. So hopefully I was able to answer that question.
All right. And then one final one, and then we're fresh out of time. So Udwak, and then the panel can chime in too. What types of commercial loan policies and procedures would be required to engage in Exim's working capital program?
Sure. And I think another great question, and I think, it all goes back to, start with, what we've delineated in Part 723. And it's not prescriptive, but it provides a required general framework, right? So, for example, a commercial loan policy, within that policy, you should detail the types of commercial loans that you're doing, and all of this should be approved by your board. The concentrations of such loans, the qualifications of the personnel, which we actually just spoke about, and then any underwriting standards for, the various types of loans. So say if you already have a guaranteed loan section of your policy because you do SBA and USDA loans, then you can just add Exim in there and add anything that's Exim specific. I also note that under the Exim facility, there must be a reasonable assurance of repayment. Samara mentioned that earlier in her presentation. So you should be working with viable businesses that have viable export strategies. I don't know if we could just take a few more minutes to have tomorrow just kind of expand on how Exim defines that terminology of reasonable assurance of repayment.
I can answer if we have the time to do so.
Actually, we are running short of time, but go ahead, Smaro.
So just quickly, you want to assess your customer to make sure that with their sales, they're able to pay back the facility. At the end of the day, you want to make sure that they have good debt service coverage ratios, that if anything should happen, you have recourse. There's a guarantor in the facility. If there's adequate equity in the company, that's altogether be a reasonable assurance of repayment. That's not to say that, if there's negative equity in the company, we won't take a look at it. We will take a look at it. But we want to make sure you as a lender are comfortable that at the end of the day, your loan will be paid.
Okay, wonderful. Thank you. Well, we are out of time. We only had a few more questions, but we'll try to make sure that those get answered as well when we move this webinar into our learning management service. So we'd like to thank all of our speakers, thank the Honorable Kimberly Reed and the Honorable Rodney Hood, the chairpersons for their respective organizations, Exim Bank, for Mrs. Reed, and of course, for Mr. Hood, NCUA. We'd also like to thank Udwak for being our host, and Smaro and Jeff for their wonderful presentations. And also thank you to Franz Ayento, who is our behind-the-scenes person, and On24, who supports our platform. We want everyone to have a wonderful afternoon. We hope to see you next time. See you in September for our next webinar. Have a wonderful afternoon, everyone, and a great week.